So glad to have you with us here on a Monday morning. I'm Marlin Bohling with you, your tour guide to the ag commodities. And boy, they are active as we get rolling here on a new trading week. Now, this will be a full trading week. Of course, last week was kind of short. But boy, no shortage of excitement already. Let's take a look at the corn market here and see what's going on at the moment. Well, I think you just saw it just tick higher there. It's now 10 cents higher on July corn at $7.37 per bushel. Now that would put us about 4 cents from our earlier high. And you have December corn now 9 3/4 higher at $6.99 3/4. Come on, give us one more tick. We'll have $7. It got as high as $7.05 overnight, and it's just hanging on the cusp of trading at $7 right now on that December contract. Well, here we go to soybeans, and soybeans have actually flipped around and gone a little bit lower this morning. July down 3.5 cents. We're at $16.94 1/4 after a high last night of $17.17 3/4. And November trading 1/4 cent higher all by itself, and it's at $15.27 1/4. All kinds of action going on in our wheat markets this morning. Let's start with a look at Chicago wheat. In July, 55 higher at $10.95 per bushel. It got as high as and we'll talk with our special guest here in a moment, but within one tick of hitting $11, and are you kidding me? It couldn't hit it this morning. It backed up a little bit. We'll see if they make another run, but 54.5 higher right now on that July contract. Meanwhile, in Kansas City, July 49 3/4 higher at $11.70 3/4. That's 5 cents from its earlier high of the day. Minneapolis spring wheat trade, July 33 1/4 higher at $12.25 per bushel. That would be off of our earlier high by roughly about 15 cents or so from the overnight high. Want to throw in the cotton market here too. We have July currently 253 points higher at 140.71 per pound, and even new crop December is up 154 points at 119.44. Well, I need a drum roll here so we can welcome aboard our new in-house guest for today, and it's regular contributor. It's Mr. Chris Swift of Swift Trading based in Nashville. Lots of stuff going on.
Well, it is, isn't it?
Outside markets, grain markets, weather, what is it? The overall trend is up today on the grain.
It is. Think about how many Sunday nights and Monday mornings we've gone to bed and woke up with higher grain prices. It's been that way for months on end, and probably until we get this crop in the ground, it'll at least keep some firm tone up underneath it for quite a while.
So what did you see happening in the overnight developments and the weekend developments? A lot of talk about Russia maybe bombing some port or something.
Well, from our perspective, it looked like the weather was great. Looked like anybody that needed to get some planting wrapped up was able to do it. And we're still having to deal with world issues. That's something that the United States had not had to done in a long time, is deal with world issues out there, because our import-export markets were fairly steady. And now that we have somebody bombing ports and disrupting everything under the sun that they possibly can, we've got some troubles out there.
Now, around here, locally, the crops look pretty good, but I tell you what, there's a lot of places around the country. I'm hearing across the center part of the Corn Belt, even into the southwestern part of the Corn Belt, and even further north, there's a lot of replanting going on.
Yeah.
And I didn't realize they were having so much trouble with wet conditions and ponding and damping off and all that stuff.
Yeah, but we were at 14% incomplete planted last week, so anything that is done is probably just being wrapped up from that. Soybeans will be interesting to see how many acres they got planted with the corn already having so much done.
Bases holding together okay?
No, actually they're kind of starting to slip just a little bit. Yeah, the more crop you get in the ground, the more that basis is going to go away.
Okay. Well, if you don't mind, sit tight.
Yes.
We'll come back in just a moment, and we'll take a look at our livestock trade in just a moment right after this. Time to talk a little livestock market action with Chris Swift of Swift Trading. Well, let's take a look at live cattle right now. And in the early going here today, as we look at the prices, just not a lot going on. We're mainly higher, but not by a terrible amount. We have June up 25 cents. And August now 17 cents higher at 134.02. So not much going on. In fact, December and February are unchanged to a nickel lower out there. With the corn market higher today, we have the feeder cattle market coming, I guess, understandably, under a little pressure. We have the August down 95 cents and September down $1.12. That September is at 175.27. And that's a little over $1 off of its earlier high that was established this morning. Lean hog trade under pressure. Boy, they're getting after the July contract, down $2.75 now at 108 even. and we have August down 255. So lots of pressure. All of the months on the lean hog trade are showing triple-digit losses. 3 of them are over $2 lower. So what's with the lean hogs? Why so weak in the knees, do you know?
You know, I really don't, Marlon. I haven't paid a lot of attention to it the last couple of days. I think our exports were pretty good last week, but again, they're still carrying premiums over the index right now, so I think that could be the biggest reason for it. It's just a little bit of convergence of basis.
Let's talk about this live cattle trade. Cash cattle last week were a little bit weaker, right?
135, 134, probably going to continue to be weaker. We've got a consumer that is really inundated with a lot of inflationary aspects that are probably controlling their pocketbooks a lot more than what beef prices might be. And we've got a real issue with a lot of cows being slaughtered right now. We've still got those drought persistent areas there that are keeping more cows moving. And we know that we're probably placing fewer feeder cattle and fed steers going to be coming out. But with the cow kill elevated, we know that we're not short of beef anytime soon.
Well, we know during the pandemic, there was such a shortage of available supplies. You couldn't run them through the packing plant fast enough. Has that problem all gone away? Has it been cured?
As far as I know, I think packing capacity is now set to a stage that just runs it about as smooth as possible. They don't want to increase it too awful much because they don't want to kill the price of beef, and they don't want to decrease it too much because they don't want to back cattle up either. They've got a pretty steady flow going right now, as best I understand.
And what about the deal with the feeder cattle? There was talk that there would be a kind of a hole in the supply this fall.
And there
Still
very
feel
well,
that way?
yeah, there very well could be. We know that we probably started placing fewer cattle in May, so May is probably going to be a lower placement month and carry that way all the way into the end of the second quarter and first of the third quarter. We just got fewer cattle out there. I mean, that's just all there is to it. But again, the elevated cow slaughter right now is masking some of the issues that we think may come about later on in the year.
You mentioned when we were talking earlier that seasonally you tend to have a little pressure on hogs right now.
Yeah, they do.
Does that apply to cattle or not?
Actually, it's a little bit softer now, all the way into the end of June and the 1st of July.
Well, thanks for pointing that
Absolutely.
out. Appreciate it. And thanks for coming in again.
Always a pleasure.
All right, Chris Swift of Swift Trading with us here from Nashville. Janet, I'll turn it back to you.